All right, I think we're going to get started. So again, welcome. My name is James Horrocks. This is Doug Wilson, who you see in the box. We'll be your presenters today for our quarterly updates for the end of the third quarter. We've been getting great feedback on these, so we're going to continue to do these, basically every quarter until we just think it's not valuable anymore. And based on your feedback, it really is. So, oops, I can't turn the page. There we go. So as I just said, Doug is joining us today. He's one of our relationship managers, a certified financial planner, been with the firm over 4.5 years. Doug, we've made 5 yet?
Almost there.
Almost there.
Yeah.
Almost there. Doug, you may want to turn your volume up a little bit. I don't know. It's a little quiet on my end.
Okay.
So remember, the rules of the game tonight is that you guys are all muted. So we don't have a lot of background noise. But we do want, this is about you and your opportunity to ask questions. Some people have sent some questions in beforehand, but feel free to go to your question box on the screen and type in any questions you have. We'll be checking that out throughout the entire presentation and make sure we answer your questions for you. So here we go. Let's get to it. So our purpose of doing this today is the same as always. We want to keep you connected to what we're doing here at TimeScale, but also keep you connected to what's going on in the marketplace and the economy. We want to inspire you to really make you feel good about the things that you're doing, which ultimately empowers you to feel great about the decisions that you're going to make, so that you don't have to worry about all the noise going around you. You make your decisions based on the plans that we're doing, and you can feel confident regardless of what's going on all around us in the world. So with that being said, the outline tonight, pretty similar to what we've been doing before. We're always going to go over our firm updates. We have a lot to talk to you about. We got a lot of new things going on here. We're also going to do a quick market overview. I had some interesting comments with a lot of people over the last couple of weeks that I'll share with you. Maybe you feel the same. We are going to touch on the Biden administration proposed tax law changes. Remember, they are proposed, but we thought this would be a good time to start getting it in our minds because some of this may go into law soon. We're going to talk about how all the things that we just discussed you should think about those as financial solutions for you to consider inside of your own plan. And then lastly, again, we'll take questions, but we will take questions all the way through. So please don't hold back. While I'm talking, Doug will be checking out the questions. And when Doug starts doing his parts, I'll keep an eye on it so we don't miss anything tonight. So without further ado, let's get right to it. Our firm updates. So our office status, as many of you know, we continue to work from 8 to 5, Monday through Friday. We have, starting in September, come back to the office on Tuesdays and Wednesdays. So we are here. As a general rule, we will work remotely on the other days of the week. But look, we are here for you. If you want to have an appointment in the office, it doesn't have to be on Tuesdays or Wednesdays. We will come into the office and speak with you then. Obviously, we can always continue to use Zoom and keep connected that way. So whichever works out best for you, we'll always try to accommodate what's best for you. We also, some TimeScale Financial communication. So what's new there? We have the TimeScale Financial newsletter, Taking Measure. Many of you probably have already gotten these emails. This is another way we're trying to connect with you, remind you of the things that are going on, update you on some things that may be happening that we don't want to wait to the end of the quarter. So a lot of new things coming out about that. Please take a look at it. You'll get a lot of current news, upcoming events. We have a lot of webinars we're running. We're doing a lot of blog posts now on social media, which you'll get a chance to see. And again, all the webinar replays are here also. So some of you were really excited about the one we just did recently on travel. We had a travel expert talking about COVID, and we had some slides that talk about places to go to get updates on the COVID restrictions and so forth in different countries. You can get all of that right here. So we always will throw that back onto these webinars for you. I'm sorry, to the newsletter. And then finally, you can always visit our blogs. We're doing a lot more blogs and writing on different current events and different things that are going on. And again, our website is timescalefinancial.com. More communication things. So follow us on social media. We're really excited to be on LinkedIn with TimeScale Financial. Many of you have already joined and started following us there. We're also going to be on Instagram. We are there already. We just had our first one come out. So please follow us there if you can. We'd love for you to like some of the things that we're doing or dislike it if you do not like it. But continue to do that. You can also follow us on YouTube. We're doing a lot more videos, and you can grab our videos through YouTube as well. And again, it's YouTube at TimeScale Financial, Instagram at TimeScale Financial, and LinkedIn at TimeScale Financial. So very easy to do. And we'll continue to do updates and things through there to continue to communicate with you and let you know, again, what's going on at TimeScale and what's going on in the outside world, in the environment, economic environment. So a lot of people ask me, before I get into what this TimeScale Financial app is, I get a question quite often about, wow, you guys seem to be growing so much, and why do you keep growing? You know, sometimes with growth, you know, you don't get as, you know, you feel like you're missing out. Look, we work really hard to continue to stay connected with you. We work really hard to continue that small feel that you are the only ones we work with. We try really hard to continue to do that. But I've talked about this many times. I feel with the industry the way that it is, if we don't continue to grow, we will not have the resources and the scalability to provide you all the things that we think that you should have and frankly need. And one of them is here. So, you know, you've seen us grow an awful lot over the years, and I kept saying new things are going to come out. Well, here's one of them, TimeScale Financial app. This is an app powered by Black Diamond, where you now can access all your investment portfolios and performance reports via the app right on your phone. Some of that's a little dangerous for you guys out there. Let's not check it every day and drive ourselves crazy, but it's there for you if you wanted to. It's a much cleaner way to look at your accounts than if some are using Schwab or even eMoney. It's also, like I said, has performance for the first time, extremely accessible through the phone, and it's very safe. There's also, with the app comes a vault. What that means is, so when you go to your TimeScale Financial app and you look on your phone, there's a thing inside of, you know, with all your accounts and stuff, there's another window that will say Vault. If you click on Vault, that's a secured place that we can send you information. So many times, if you guys are traveling or you're, you know, down south for the winter and you just want to get a financial report on something and you ask us for those things, we can send it right to your vault so that it's secure. You can get it right there without having to go through that secured message that we send you guys sometimes, which can make it a little bit more difficult and tricky to go through. So we're super excited about that. This is what it looks like in the App Store. If you have any problems, contact your relationship manager. By the way, you can't do this without calling us first anyway, because we have to do some things behind the scenes to get you all set up for it. So please contact your relationship managers, and they will get you set up for it. And then it's really simple after that. You just download it and log in, and they will get on a call with you and get you right and set up, because we want everybody to be using this. We're really excited about it. And there's a little symbol about how you get in. We have updated our phone systems. Again, now that we're kind of a little bit more remote, we wanted to get our phone systems upgraded. We had to install a second one, so we really appreciate everyone's patience. The first one we tried to go to wasn't as good, but we really want to make sure that we get everything updated and as efficient as possible with the best technology. You may have noticed a new greeting with some new options. Again, if you're struggling with that, please let us know. You can send us an email, call. If you have my cell phone directly, call me, whatever you need. We want to make sure we're getting connected with you. I always want to tell people, if you have not heard from us within 24 hours and something's wrong, we either didn't get your message or something happened. So please try to find us another way. Hope that doesn't happen, but every now and then it does. We want to be a modern solution for you so we can really ultimately provide a better experience. One of the things that our old phone system used to do is you have to wait to go through everyone's name to find the person you want. The new one, we're not doing that anymore. So it's a little bit quicker for you. Hopefully you can get to who you're looking for faster. Again, please let us know if you have any issues. And most importantly, thank you for your patience. I know for a couple people, not very many, we did have a little bit of phone issues. So again, want you to know we hear you, and we're always trying to upgrade and get the most efficient things we can. So a new phone system, and this one already is working great, so we're not worried about that. We're going to be sticking with this one. Webinars. So we have continued to do our Family and Friends webinar series. We started them back up in September. As you know, we started these because of the things that you asked. So these are more webinars around a target audience of sometimes family and friends. Some people have asked us to do budgeting things. That's coming up soon. We've got a stock one that Doug is going to be doing. So there's a lot of people that get stock through their companies. We're going to have an accountant there to help out in those things. So a lot of people's kids are in that situation, or you're in that situation yourself. So we're going to continue to do that series. Again, we're getting great attendance to those. So as long as we keep getting the attendance and the great feedback, we'll keep doing it. Because it's really, that's what you asked for us to do, and that's what we're going to continue to do. The other thing that's interesting, though, is some of the topics we are now turning away from personal finance because we want to do some lifestyle conversations, like the one I just mentioned earlier, where we did a travel segment. We have someone that we work with who helps people, helps groups do traveling, and also talked about the challenges of traveling through COVID. So it was a lot of discussions around that. And if you want to see that one that was just recently done about 2 weeks ago, again, please go to the website. All our recordings are there. And again, if you can't find it there, call your relationship manager. We want to make sure you connect to that and we'll send it out to you. We have some upcoming events, as I was talking about, Taking Measure. When you look at our newsletter, Taking Measure, you'll see them all there and all the invitations. So you can sign up for any one you want when you get the newsletter. They're all kind of laid out there. And I think there's about 3 of them coming up in the near future here. So please sign up for the ones you want. And again, just in case you missed it, there's a section of the newsletter where you can get the recordings, and you also can go to the YouTube channel for TimeScale Financial, and they're there as well. So many, many ways to get back in touch and see these again. And by the way, this one's being recorded. So if you want to see this, this will also be on. Whew, all right, that's a lot of stuff that we're doing. So I haven't seen any questions come through yet, Doug, so I'm going to keep going. All right, so U.S. financial markets update. Let's take a look at this. So where are we year to date? This is all through basically October 13th. So just about Friday night's close. If I got my dates, no, not Friday night's close. That's yesterday's close. Excuse me. So you can see the Dow's up 12%. The S&P 500, which is kind of the major measurement of the overall market, is up 16%. And the NASDAQ, which is sometimes talked about a little bit more technology heavy, is up 13%. Last year, that NASDAQ was up huge. What's been really interesting to me is I'm getting a lot of conversation about, wow, the market's really been down this quarter and maybe I should buy in. So listen, I love the attitude. But the real story is this quarter has been flat. We really had like a little bit of up, a little bit of down. And basically when we got said and done, the S&P 500 this quarter is up 0.58. That's it, 0.58 positive, which is basically flat. So we're really not, I think sometimes, as I always kind of talk to you about, the media gets us going in different ways, gets us thinking things a little bit short term sometimes. And if you kind of pull it back and look longer term, the market continues to be very positive. And as you can see in this chart, it's basically this year has really gone straight up. We had another little dip in March, kind of similar to March 2020 with COVID, but not the 30%, but basically a small dip in March. And that's been about it. Another small dip in September. But other than that, we've kind of gone pretty good. It's been a great market. And our portfolios continue to perform in line with what our expectations would be around a market like this. So what are the things that we should be thinking about, or points to note? Look, volatility remains to be a big discussion point. Like I said, the third quarter may have essentially been flat, but there was a lot of ups and downs. We also are very concerned still in the economy with the inflation. Inflation is a really big deal. It's going to can affect a lot of different things. I think, obviously it's how much dollar, what our dollar can buy us at the grocery store. But more importantly, it can talk about mortgages and other things like that. If you're on variable rate mortgages, which you hear us say all the time, we prefer you not to be, that could affect those. Right now, interest rates seem to be relatively in control, but I do believe, as we all know, energy prices are moving forward. Food prices have really been moving and skyrocketing. So it's something we really have to pay attention to. Obviously, the COVID effect is still out there. I would love to have said that we are way past COVID at this point, but we are not. So it's something we still have to pay attention to. The political and social environment is still there. That's probably going to be up there the rest of our lives because there's a lot of different changes that are going on all the time politically and socially. I also should have added in this part with the political side, the tax changes. So we may have some headwinds coming up against the economy on the taxes. Adding taxes or increasing taxes sometimes is a headwind against the stock market. They don't like that sometimes. We'll talk about that tonight. And then finally, I just wanted to mention that there was very few investment portfolios that were rebalanced this year. And back to that rebalancing story, another reason for growth, again, what we were able to do now because we're a larger size is put in the ability for us to really have a very disciplined approach around rebalancing. We look at every portfolio, every one. Somebody asked me the other day, how can you look at every one? We can. We look at every one. We've got a couple great gentlemen that work on this, and this is what they do all day long, is concentrate on these portfolios. So at the end of every quarter, we look to see if you go outside the bands. And if you do not, we don't make changes. We only made changes to about, I think it's just under 30 portfolios last quarter. So it doesn't mean you're going to get changed all the time, but we review it every time. And why do we do that? Look, the primary benefit of portfolio rebalancing is to realign the asset allocation and to keep your risk where it's supposed to be. We don't want it to get too far out of the way, too risky. We don't want it to get too low. So we always want to make sure you're in the right spot. There's huge advantages to rebalancing. This is why I love this so much, because I'm so excited to have this discipline. Couldn't do this 10, 20 years ago, for those of you who've been with me that long. Look, like I said, it realigns your risk and keeps in the right spot. In many cases, you end up selling things high and buying low. If you ever took a finance class or a stock class, you always want to sell high and buy low, sell high, buy low. That's what you want to do. And that's what rebalancing allows us to do. Tax loss harvesting, really important to look at opportunities like we did during COVID when the market fell. Like I've always tried to tell people, we want to make sure we're flexible for whatever the stock market environment is, because we don't know what it's going to be like. We didn't know that COVID was going to happen. We certainly didn't know after COVID, the stock market was going to rise from the bottom about 60% before the year even ended. So what we try to do is take advantage of the different things going on. So tax loss harvesting, the idea of capturing some losses so we can offset them against gains later. And we're able to do that now in a very disciplined approach as well. And then finally, many times can exchange your holdings, any investments that you have, for lower cost investment vehicles. We review that all the time to make sure you're always in the lowest cost things we can. Phew, there's another fast spot. I feel like we're going really fast here tonight. Any questions? I don't see any. All right, well, let's talk about some exciting new things, right? The Biden administration, the key word I want to use here is proposed tax law changes, proposed. This is not in law yet. This is just what they threw down the first time. As I said to somebody, like any negotiation, they start out really high and hope to get everything they want, but if they get in the middle, they're pretty happy about it. So I'm going to tell you that most of the stuff you're going to see here, I highly doubt will go into law the way we're going to show it. But we thought it was very important that we start to have it in our minds and thinking forward a little bit about it. So in this space, there's an awful lot of things that are going on. So this was presented on September 13th. They're asking to have the law changes take effect in January 1st, 2022. That's one of the most important things that was brought up, because when this originally started, they were going to retro it for 2021. Wow, that would have been very interesting, because it would have given us no time to plan. You know how much I don't like when I can't plan. So this gives us at least a little bit of time. And one of the things they're actually trying not to give us any chance to plan, and I'll go over that with you in a second. Now, there's a list about 10 pages long of all the proposed changes. We thought it'd just be nice tonight just to go through 5 that we thought were the most relevant ones to you and our family of people that we work with. So we have the capital gains changes, the ordinary income tax, the gift and estate tax exemption changes, backdoor Roth changes, and then finally there's a business solution here, where if you're an S Corp or an LLC, they're changing what they call the qualified business income deduction, which I'll explain in a few minutes. But we're going to take you through these really briefly, tell you what's being proposed, but remember, it is proposed. So Doug's going to take you through the capital gain one. So I'm going to turn it over to you, Doug.
Perfect. Thank you, Jim. And yeah, I have to echo that thought that, again, this is proposed stuff. This is all still being worked about. So for these first 2 that I'm going to cover with capital gains and ordinary income, the key things to remember are that these changes are being proposed really around the tops, meaning the top tax brackets and the high income earners. But before you go ahead and sort of write this off maybe as something that doesn't apply to you, in both cases, we're seeing those income thresholds start to come down. So it's something that we're keeping a close eye on. So in regard to capital gains, Jim, if you don't mind hitting the bullet point, what they're proposing to do is the top capital gain tax rate today is at 20%. And the proposed increase is by 5% more, up to 25%. Now, Jim just referenced this. They were potentially going to be doing this retroactive for the whole year. They're now trying to have it done retroactive just to the date that it was proposed. So to go back to September 13th and say, hey, any gains, if you're in this top capital gains tax rate area, we're going to have it go back to that date to charge you the new higher rate. So something that we are keeping an eye on, and what also may apply now, and in addition to that increase, is a 3.8% increased tax on net investment income. So that would also apply. So you're looking at sort of an effective rate of 28.8% if that applies to you at those high levels. The key income thresholds are 400,000 for single filers and then 450 for married filing joint. So again, like I said, if you thought that this may not apply to you because you're not way up in that top tax bracket today, those are coming down from much higher numbers. So that's why we want to keep track of this and make sure that if this does apply to you, that we plan effectively. Jim, go ahead.
All right, we got questions came in immediately as soon as you started talking about taxes. Everybody gets excited. So one of the questions was, so what the concern, I'm going to try to paraphrase the question a little bit. If I sold and had a capital gain, does that get added to my AGI? It would put me over one of the limits so that I would go to the higher capital gain tax bracket. That makes sense.
Yeah, the answer is yes. So it gets added to your AGI for the sake of looking at, hey, what tax bracket are you in? You're just not paying ordinary income taxes on that gain. So it is an important distinction. So if you had a big gain this year or have a big gain from September 13th on, that is something that you're going to want to talk to your relationship manager about. You probably already are, but that is something that we're going to want to monitor because that could affect us going into next year. So whether it's big gains in your portfolio, or maybe you sold a property for a really big gain or some other asset, that's something that we're going to be in communication about, because that's a great question. That does factor into the equation.
Yeah, just to put an example around it, if you're making $100,000 a year, just real round number, and you sold a capital gain and you're married finally jointly for $500,000, just say it was a big gain, you were holding the stock forever, and you decided to finally sell it, it's $500,000. You say, well, I'm only going to pay 20% because my income's at 100. Nope. Now that puts you up over, because 500 plus 100 is 600. You went over to 450. You're now going to pay at the higher rate. So be conscientious of that. And by the way, this is if this passes, this is the one we can't do anything about because they want to make it retro to September 13th. So it's not like we can run out and sell all our gains tomorrow, because if it passes, we can't do anything about it, because if we sold something now, it goes back, we can't do anything. September 13th, we can't retro anything now. So just with that being said, sorry, Doug.
No, that's a great point. Great point and good example. And this is a big one, obviously, that applies in our world a lot for everybody as families and individuals.
And this is important to all of you, because what has gone on recently is we've had massive gains, right? Since we did that big rebalance back in March, we have a lot of gains coming out. So it's a very important part. Doug, I have another question that is, and it just came through, and it's back on the economic part. So we might as well take it right now.
Yeah.
Someone asked, and you can take it or I'll take it, but it says, if inflation continues to increase, what will be the impact on fixed income assets and equities in the next 12 months? You want to take that? You want me to do it?
That's your favorite one. I'll let you go for it.
All right.
That question.
If inflation goes up, and I'm not going to do my bond class that I love to do.
That's what I was hoping for. I was hoping for bond class.
I'll hold on to that for one more second. But if that increases, what happens is bond prices will come down. So that's just the way it works. Bond prices will come down. That does not mean, though, when you buy a bond where you're getting interest from it, that you're not going to still get your interest. It just means that your bond doesn't look so good. If you have a bond where you're collecting 2% interest, and all of a sudden that same bond with the same term and maturity can now get 2.5% interest, your bond just doesn't look so good, because someone can go out in the street and get one with higher interest rates. So if you wanted to sell your bond, you have to attract people, get them excited by giving them a discount on your price. So that's why your price goes down. So yes, the answer to your question is, as interest rates would go up, your bond prices would come down. But as I try to communicate, because many of you hold fixed income, which is bonds, that we are here, we purchase bonds for the purpose of getting that income. We're not there always, looking for a price increase. If there's a price increase, that's great. But again, we're looking just for the income and the stability that comes with owning bonds inside your portfolio. So I don't like to use this term very often, but I'm not as concerned about what happens with those. We ladder your bond portfolios. So we always have a lot of bonds that are maturing every month. So if interest rates are going up, we just take the ones that mature and we flip it to the next ones that, as interest rates keep going up. It will make your bond portfolio not look so pretty because, again, your prices will be down, but focus on the income that's coming in. For those of you who are retired, you've probably heard me say this many times, inflation is your friend. because you don't feel the effects of inflation, because in theory, inflation is based on a family of four who's consuming, driving to work every day. Well, I don't know how many people are driving to work anymore, dry cleaning clothes, feeding a family of four, buying milk and bread. If you're retired, in theory, you're consuming a lot less, so you don't feel that effects of inflation. But if inflation goes up, you can get more interest on the money that through your bonds and everything else, you're going to, in theory, make more money. Now, on the equity side of things, if the interest rates go up, that can, there's not always an exact correlation between the stock market there, but definitely will make it, in my opinion, probably pull back a little bit, because it's going to hurt real estate a little bit. Because again, if interest rates go up, mortgage rates go up, which means it's harder to buy a house because the mortgage payment would be higher. So that usually makes mortgage housing prices come down. So I don't think, it's not an awesome thing for the stock market. But again, it's a natural thing that happens. And we've been positioning the portfolios for a long time to make sure we can take advantage of that situation. So really long answer, but I hope I answered that for our friend in California. And then let me ask another question. This one is now on the taxes. Is the threshold, this is from our friends, I don't know if they're in South Carolina tonight, but that's where they spend a lot of their time. Is there a threshold, is the threshold through total income or investment income? And I think we did answer this, but I wanted to answer it just correctly. So go ahead, Doug.
Yeah. So this is based on your AGI, or adjusted gross income, and that factors in, income that you're earning through wages or Social Security or money you're taking out of retirement accounts, plus things like capital gains, right? You're not paying income tax on that, but it factors into that AGI number. Again, that's adjusted gross income. So that's the total income there. And then the follow-up question, does the 3.8% apply to total income or just investment income? That applies to just investment income. Just that capital gain, you can sort of tack on that extra 3.8% if you are in that top level that's going to have a 25% capital gains tax rate. All right. So
great. Hopefully that answered those questions for you guys. Again, if there's something that you didn't get enough specifics tonight, contact us. Obviously, we'll give you all the information that you want, and make sure we want you comfortable with. But remember, propose. It's not law yet. All right.
Yeah, before we get too far into the weeds. All right, number 2 is ordinary income.
Sorry, I'm working on it, Doug. There we go.
Oh, that's okay. So ordinary income taxes. And again, remember, the same theme here is that the changes are happening up at the top levels, right? But before you dismiss, hey, this doesn't apply to me, we have to understand that thresholds are coming down. So what they're proposing is that the top ordinary income tax rate would increase from 37%, which is what it's at today, up to 39.6%, but those thresholds are coming down. So if you're married filing jointly, that's coming down from up around 600 and change, way down to 450. So that could affect a lot of people going forward. If you're married filing separate, 225, single 400, head of the household 425. So you can see those thresholds right there. But again, the theme there is that thresholds are coming down, and that top bracket is going to increase by 2.6%. So that's another thing to keep in mind when we're looking at ordinary income taxes. The middle areas, really no change as of today. But again, this is proposed, like Jim said, so that could change as things go from committee out to the floor and back and so on and so forth. So Jim, I'll now turn it back to you for 3 through 5.
All right, let's do it. So now I get the fun one of the gift and estate tax exemption. So we've talked an awful lot about death. This is really death tax related. So they were asking the federal tax limit today. So if you passed away today and you have an estate, a net worth under 11,700,000, guess what? You don't have to worry about federal death taxes. If you're in Massachusetts, it's a different story. We talk about that all the time. What they're proposing to change it to is starting December 31st, 2022. I'm sorry, January 1st of 22. They want to drop it down to 6,030,000. I don't know where they got the 30,000 from, but 6,030,000. By the way, this was already changed in a tax law previously, but it was a sunset. Sunset means that on December 31st, 2025, it was supposed to do this anyway, unless someone changed it. So what this new proposal is to speed it up, bring it up to January. So for those of you who said, I don't have to worry about this 11.7 because I only have 8 million in net worth. Well, guess what? They're coming for you, and they're going to be looking for you at 6 million again, if this passes. Backdoor Roth conversions and rollovers. If you don't know what this means, don't worry. If it means you haven't done it, and you probably weren't capable of doing it. Backdoor Roths are a very particular thing that only can be done with certain people. It's the idea of putting money into an IRA and rolling it into a Roth, an after-tax IRA, by the way. And what the proposed change is that they're basically not going to be allowing it anymore. They're also not going to be allowing partial IRA conversions to Roths. We do that for a lot of people here. They're talking about getting rid of that. So that'd be a real bummer, but we'll wait to see if that gets done. In addition, they're also talking in 2032 that based on different AGIs, that's adjusted gross income, where your tax line is, they may be taking away any opportunity to convert IRAs to Roths. So they're really trying to tighten this up so people really can't take advantage of the Roths if you're in too high a tax bracket. But the one that stings it here is no partials. So that would be a little bit of a challenge without the partials, and no more backdoor for some of the people. We do a lot of those for some people who fit that profile. It's pretty hard to fit that profile though. All right, no questions. Any questions? We'll move on to the next one. This one is specifically for business owners. And I do notice there's a couple of our business owners out there tonight. If you own a business that's a a S Corp type of ownership, an unlimited partnership, any type of partnership, the challenge here is that Trump, when he changed the tax laws, gave you a 20% deduction from your business income. So what that meant is if your business made $100,000, you didn't pay tax on the 100, you got 20% off on that. You only had to pay tax on 80,000. It was an upper limit on that, by the way. So it wasn't just blanketed for every business. They want to basically take that away. They want to set maximum limits on it and deductions for these kind of similar limits that you saw before. If you're making money above these limits based on how you file your taxes, they're just going to wipe it away. This is a big one for some of our business owners out there, because some of you got a massive benefit on this, because again, if you made $100,000, you're not paying tax on $20,000 right off the bat. And in a lot of these high tax brackets, that can be as much as, $8,000 in taxes federally, and even more when you add in the state. So if this goes away, be prepared for taxes to increase in 2022. Again, just to remind you, when the law does get changed or whatever happens, we'll be doing one on not proposed anymore. We'll be doing one on here are the new laws. So we can all try to plan for it the best we can. All right. Any questions to continue before we move on? I know that was a lot of stuff.
I don't see any.
All right, Doug, we're going to turn this over to you. Tell us how some of these things are, what we should be thinking
Perfect.
about now this time of year in the fall and so forth.
Yeah, exactly. So what we're going to do now is, now that we've kind of covered all the nitty gritty on tax changes and what's going on in the market, let's kind of take a deep breath, take a step back and think about, hey, how do we bring all this back to our plan, back to you and your goals and what you're trying to accomplish? And so I know everybody on this call today, for the most part, has seen this, maybe going back to the days of it on yellow legal pads with Jim's 3 circles, but this is our financial planning process. In a nutshell, really easy to understand and explain. It's the execution that's the hard part. It starts first and foremost with our goals. Why are we here and having this conversation? And then we break all of our efforts into 2 main phases. The first we call coordinate and consolidate, and the second protect and conserve. Across that first part, there's really 3 main areas. The first being spending. It's just the money you need to live on every day, right? Savings is the money that we have set aside for upcoming expenses. And then investing is the pool of assets, right? The resources we have growing for those long-term goals of maybe retirement or financial independence. So once we do all that hard work coordinating those 3 areas across the top, then we got to make sure nothing comes in and blows all this up, right? We got to understand our taxes, make sure we're paying Uncle Sam as efficiently as we can. Risk management's just a fancy word for insurance. Do you have the right insurance in the right places based on the goals that you have? And then lastly, estate planning. If something happens to you, your spouse, both of you, what happens to all your stuff, your family? Where does it all go? And so, all 6 of these areas really have to be pulling the rope in the same direction towards those goals. No one part is really more important than another. I know Jim has said this ad nauseum in the past. I say it all the time. Our industry loves to make it all about investing, right? That's one part of 6. So we got to make sure we're looking at these other 5 areas and have everything coordinated. And then we got to measure it in the terms that matter to you the most. So yeah, obviously investment performance is really important, right? We want to have good investment performance, but along the theme of taxes tonight, right? If we hand half of it back to the government, well, that doesn't do us any good. So we got to measure our progress in terms of, hey, are you closer to the goals that we have defined for you from when we first started working together? So that is our process in a nutshell. Now let's talk about some financial planning ideas and solutions, things to think about within that framework, basically pulling things from tonight, but also seasonally, right? What are some things we should think about going in towards the end of the year? Well, just like how the process starts with goals, we have to start with checking in on our goals, right? Have we had any changes? If we've been on this path going this way and suddenly life has thrown a curveball at us, or maybe we just decided, hey, we're going to do something different now. It's a great time of year, especially going into the end of the year. If you're going to be making New Year's resolutions, check in on that why, right? Why are we here? What are we working towards? And if anything's changed, obviously you want to talk to your relationship manager about that. So that's first and foremost. Across spending, there's a couple things we always want to be doing. And then sort of seasonally, we want to look at our COVID budget, which I'll get to in just a minute. But consistently, we always want to be monitoring our budget. I say this all the time to the people that work with me. It's not to be the fun police. It's just to understand it. It's a key part of that overall financial plan is knowing what you need to live on. And if you're still working, then how much surplus do we have and what do we do with it from there? So if you are still working, aspire to increase that surplus, right? We want to try to save as much as we can towards the goals we're working towards, or being able to pay off debt as efficiently or as aggressively as we can. So aspire to increase that. But for our retirees, and this might apply to the working people too, what has happened in a seasonal sense is that everybody's got the COVID budget. We're sort of stuck inside. We're starting to go out a little bit more, but we've seen a lot of emergency funds really creeping up there. So if you do see that, we don't want to be having all kinds of money sitting in the bank. So we want to, number one, check in and make sure, hey, are you doing all the things you want to do? So make sure that, if you can be going out, go out and do those things, and don't let the COVID budget, sort of set you back and have money in places that isn't working as efficient for you. And so that's a key thing to think about in terms of your spending plan, for right now. Going on then to savings, there's a number of areas we want to look at here in terms of, what we're doing on a consistent basis. And again, what we're doing seasonally. We always use that emergency fund, right, in the savings category. That's that barometer. So I just referenced it in relative to the COVID budget. We've seen a lot of them going up, but that's a key indicator of whether our whole plan is really working. So always keep an eye on that. If you are a homeowner, we've been talking about this a lot with our homeowners. Establish a home equity line of credit, if for nothing else than just an emergency for the emergency fund, right? A backup for your emergency fund. These are harder to get if you lose your job. So going back to March of last year, if you had a HELOC in place, and if for whatever reason you unfortunately got laid off or hours got reduced at work, whatever, having that home equity line already there was a really important fallback for a number of people. So think about going out and getting one. Again, it can just sit there and not be used for, a period like 10 years, but it's just a great thing to have as a backup to our emergency fund. Then thinking about seasonally, right? If you do see that, that emergency fund sort of building up, we want to think about, hey, we're getting in towards the end of the year. This is a really big time of year for gifting and charitable giving. We're actually going to have a whole night devoted to this coming up on November 10th, which I'll share a little bit more on, but keep an eye on that in our newsletter. We're going to be talking about donor advised funds, which actually apply in another area of the framework as well. But start to think about that, right? If you have those extra funds, how can we start to do some gifting and charitable giving, but do so in an efficient way, right? That helps you out, does the things you want to do, but might also help you in terms of taxes or things like that. So important stuff to think about. Going on to investing, couple things we're doing all throughout the year, right? Number one, what we always want to make sure is happening, if you take nothing else from tonight, it's that, hey, goals and risk have to be aligned, right? If your goals are here and your risk is way up here or way down there, that is really not where we want to be. So if you're working with us, that is very likely not the case, because we're in constant contact with you to make sure that's not happening. But again, just make sure that risk and goal are aligned. So if you are starting to think about maybe retiring, talk to your relationship manager about that. Maybe it is time that we sort of start to reduce your risk a little bit. The other big thing, if you're working with us, you're probably sick of this word at this point, but rebalancing. I know Jim talked about it a lot tonight. That is something we look at every quarter, right? And that we are on top of for you. But again, the purpose of it, the reason it's so effective is that long-term, making sure your risk and your goals are aligned. That's how we're doing that first bullet point, is by rebalancing and making sure you're in the right place. And there are also some other positive effects that can have as well. Also, just remind ourselves, hey, what's going on the TV or what you're seeing online or hearing on the radio or a podcast, a lot of times it's a lot of noise, right? They're looking at a really short period of time. We have a plan set entirely around your goals with all of your complexities and things factored in there. So we have the path already set. We just got to stay on it and not let all that noise get us all worked up. So that's part one. Okay. So we talked about some of the things across the coordinate and consolidate area. As far as tax planning, number of things that we want to do. What we're doing all the time is, hey, we're aware of, hey, what is your tax rate? So if you just actually recently, if you had a tax filing extension all the way out to October 15th, this may actually be a time where that deadline is essentially tomorrow. Get those updated taxes over to us, because we always want to know where you stand as we look into planning for next year. And then for the majority of folks who work according to the April 15th deadline, we always like to see, send us that tax return if you have it handy, because that way it helps instruct both our accumulation plans, right? How are we saving money as efficiently as we can, as well as then our distribution strategy. How are we getting money out the most efficient way once you're in retirement? All right, so those are things we're doing all the time. But seasonally speaking, I touched on this a little bit earlier. Charitable donations. In a couple weeks on November 10th, same time, 6:30 at night, we're going to dedicate a whole evening to something called donor advised funds. It's a way for you to give to charity. Again, be impactful, to give to the causes and things that are meaningful to you, but also do so in a way that works with your financial plan and actually helps you out from a tax perspective. So that's something that we are going to cover. We'll touch a little bit on charitable remainder trusts as well. Those are relatively popular, but the donor advised fund is really going to be the major thing, because those are really where we're focusing a lot of time right now. Going into insurance. Couple things that we want to have you do, especially right now. So all insurance is trying to do, right? It's just protecting the stuff that matters most to you. So we want to make sure we have the right coverage in the right places. A big one right now for homeowners, we've seen the real estate market go crazy, right? So you're probably seeing properties in your town go for insane numbers. That affects your home value. So without maybe really realizing it, the value of your home is now maybe up here, when the insurance you have is for a value that's down here. So check in on that homeowner's insurance and make sure the coverage that you have matches the value of your home in today's dollars, right? Forbid if anything happens, we don't want to have that shortage in coverage and not be able to keep up with where the market is today, especially locally around here. I know we have people all over, but I live in Danvers, right down the street from our office, and the market's been going crazy around here. Jim, I know you want to jump in.
Question came in. This one's local this time, Massachusetts area. So how would I know whether or not my house price is without getting an appraisal? Is there any way to get the price so I can, talk to increase my homeowner's insurance if need be? Any suggestions?
Yeah, I mean, the place to start, it's not perfect, but if you go on these websites like Redfin or Zillow, it's going to at least give you an idea. It is not an official value by any means, so maybe take it with a grain of salt. But if that number is wildly different from what you thought or what you sort of had in your head as something to think about in terms of the value of your home, then that may be an indicator that, okay, we got to go take a second look at this. Maybe you do have somebody come and appraise the home. A lot of times too, they'll look at comps in the area, so comparable properties. So that's the place to start. Like I said, it's not perfect, it's not official, but Zillow and Redfin, these are taking all those sales and listings and kind of running them through algorithms and then giving your property a value as a result.
Can always call us too. We'll help you as well.
Yeah, absolutely. Absolutely.
I'm stuck.
All right. Another thing this time of year in terms of insurance is open enrollment. It's actually, you're probably getting notices at work for it right now. And so this is a time to just reevaluate some of those benefits that you have. In particular, healthcare coverage, that can play a significant role in your financial plan, especially just in your cash flow month to month. So good idea to just check in on that stuff, not just elect what you're on just because it's what you're used to. Take a couple minutes and check it out and give us a call too. We're not healthcare experts by any means, but we see this stuff enough that we can give you some things to think about. And again, knowing your overall plan, we can help you, make that decision that's best for you and understand the pros and cons of the different plans that you have offered to you.
Yeah, we also have a lot of references to help you out too. We can connect you to different organizations that help you filter this down to make it easier for you in the health insurance. I was pausing you because I missed a question, so I apologize. This question was back on the idea of the house, the homeowner's insurance. Do we need insurance to cover the market value of the home, or is it more about the cost to rebuild?
Cost to rebuild. Yeah, that's a great. So that's essentially that number is your house, right? Minus the land. So that's the number that your insurance company is going to be focused on, and they'll help you with that. And again, it's just checking in on your existing policy. And making sure that, okay, my cost to rebuild was this. Are we still in that, ballpark? Should we think about increasing that coverage a little bit? So that's a good question. Yeah, market value, especially depending on where you live, right? That could have a big impact in terms of the value of the land itself.
Yeah, this is absolutely correct. It's the market value, not of the land. As we got another question that came into, it's more about the replacement cost. But what we're noticing with a lot of people's insurances, they've been holding on to it for 20 years. You've lived in your house for 30 or whatever the number is. Your cost to replace your house maybe was $250,000. When in reality today, that's like $750,000. So when you look on Zillow, you'll mark, you'll mind. So if your house is in Zillow says it's 800,000, you'll take off the land piece. Let's say your land is 200,000. You're looking for a coverage of 600,000. But for many people, they're still sitting on 250,000. They haven't increased it in so long. So that's really what we're focused on. But you guys are absolutely correct that that's where it starts, replacement cost. But a great way to get a concept of replacement cost is to start with the Zillow or the Redfins or something like that. So sorry if we didn't make that clear.
Yeah, and think too, one of the effects of the COVID budget is that a lot of people have been getting work done. Contractors are backlogged with all kinds of jobs and work. So if you just put a bunch of money into getting a bathroom redone, a kitchen redone, that in and of itself is a reason to check in and say, hey, are our coverages where they should be, considering we just, put 30, 40, 50 grand into that, new part of the house to get it spruced up. So great things to be thinking about in terms of your insurance coverage. All right. And then lastly, estate planning. When we talk about estate planning, it's always a good idea to just check in and say, hey, has anything changed? Is this set up the way we want it? Because a lot of times these are documents that were put together 10, maybe 15 years ago. So make sure that if you don't have one already, go get one if you don't have one. Don't let me sort of skip over that. But if you have one, just review it, make sure it matches the current goals and things you're trying to do. Seasonally speaking, though, this is a great time of year, right? We're about to see our families coming up for Thanksgiving and the holidays towards the end of the year. It's a great opportunity to, when you have family gather, especially if you're scattered all over the country, start to communicate things like intent around your estate plan. If you've just made some changes or you've just established a new one, you don't have to talk about numbers and details, right? Don't get too worried about that stuff. Just talk about intent. Because over the years, that's something that we've seen where if intent, you're not on the same page there, then that can lead to a lot of downstream effects that, maybe have an adverse effect on the relationships and things that you wanted to have happen. So great opportunity to start doing that stuff. I get it. Nobody loves to have the death talk over turkey. That's not what we're saying, but it's just a good time when you have family in town to talk about these things. It's really important that because you're not going to be here to stop your kids, if it's your children, from arguing over a situation that maybe they think mom and dad loved my sister more than me because they gave my sister something that I thought should go to me. If you can have a meeting without numbers, just sit with everybody and say, hey, look, this is what's going to happen if anything happens to us, and here's why. Because they will fight in front of you. And the best part is you're there to go, hey, enough. This is why we did it. It was our decision. And you shut it down. So later, when you're not there, when they argue,
you're not there, you can shut it down then. If you're not there to shut it down, they'll just keep arguing. A lot of times it breaks a family apart. So we find that those family meetings are very positive. We will be there with you if you'd like us just to interpret. We're not trying to get involved with family, but sometimes, people have questions or they want us to interpret some things. So probably can't make it on Thanksgiving, but we do it a lot around the holidays of Christmas and so forth. So, but please, anytime you need some help on that, let us know. We do think it's extremely important. I've done it with many of you, even some of the people that are on this tonight. We've done it with your families, and I think it's a very positive thing because when someone does pass, we knew what the purpose of the will and the estate was all made out for. So there's no real arguments between the family members about why something was done. So sorry, Doug, interrupted you.
Oh, that's exactly it. You hit it right on the head there. So just to summarize all these different areas, right? Again, we want to just make sure, know your goals, check in on that stuff, make sure we're headed in the right direction. We always want to have a good handle of our budget, not to be the fund police, just to know what we need to live on. We're always going to be looking at, hey, is our asset allocation, right? Our level of risk, is it in the right place relative to the goal we have? Those things have to align. Obviously, we want to minimize taxes where possible. We talked about all kinds of proposed changes, again, where can we be efficient? And then in terms of insurance, make sure we have the right coverage in the right places based on what we're trying to do. And then estate planning, we just talked about it, right? It's a good thing to review, update your beneficiaries, update power of attorney, healthcare proxy, things like that. Make sure that all that stuff is in line. So with that, we'll hang around for some questions. And we got a couple in.
We got a question in already. This one came in before the meeting, I think.
Perfect.
We kind of touched on this a little bit, but I want to touch on it again. It's just obviously you guys can see this. I keep hearing that inflation is coming and it's not good for bonds. Should I sell my bonds? You know how everybody, I love to predict stuff. And even when I tell you, I have no idea what's going to happen. I have said for about 15 years now that inflation is going to come and interest rates are going to go up. If you actually ever listened to me, we'd be in big trouble because if you sold your bonds, you would have missed out on a great 15-year run with bonds. So this is a great example of, again, nobody knows, just like COVID. So what do? We put in a long-term disciplined asset allocated portfolio to take advantage of each economic environment, because nobody knows. And for the ones who wanted to get out during COVID or wanted to get out due to other political reasons and so forth, we're really happy we didn't, because the market has had a great run here over the last 10 years. So if inflation does come, your portfolio is positioned in a way to take advantage of the different things that happen. We're a little bit shorter term on all our bonds. So usually the shorter your bond maturities are, the less you're affected by inflation. So we should be in really positive shape there. All right.
Excellent.
So that was a question that came in earlier. Just wanted to let you know of some upcoming webinars, as Doug and I have been mentioning. We've got one to make the most of your equity compensation. These are for people who are working we have stock options, restricted stock, RSUs, stock purchase plans. We're going to do a webinar on that October 27th at 6:30. So please let your family members know. This is one of the friends and families. Obviously, you guys can be there as well. But if you have people or, that you have friends and family or kids that you may have that are in these new tech firms and they've got all these stock options, don't know what to do, they're going to be talking about a lot of the tax implications of that. So it's really important. Doug also mentioned November 10th at 6:30 as well. We're going to be talking about charitable giving, and a lot of it's around the donor advised funds, a really hot topic right now. A lot of people are asking us questions about it. So we decided to do a webinar around it. So please, if it's of interest to you, join us for that one. And then, as always, we want to thank you. Oh, we had a question just came in, but I will do the question. We want to thank you. We are extremely humbled to be partnering with you to help you get to these goals that you guys are all trying to obtain. And for the ones of you who have made it, we've really enjoyed getting you there and having a great time and being in that partnership to ride with that journey with you. So let me kind of take this question. Let's see what this was about. Oh, nope, sorry, it wasn't a question. It was just to thank us. So we're thanking you. Hopefully this keeps you connected. It keeps you inspired. And most importantly, it makes you feel great about the decisions you're making, empowers you. If you're taking a trip and you're worried about the world, you always know my thing. We want you to be at that bar, if the TV in the corner is telling you the world's coming to end. We want you to cheers, with your pina coladas, because in most cases, you should be in a position of flexibility and options so that no matter what's going on in the world, you should be in great shape. And if you're not, call us. If you feel uncomfortable, call us. We don't want anybody feeling uncomfortable about what's going on. Here's our disclosure page. We always have to put it up. Doug and I, seems to be no other questions. So again, we thank you all so much for being with us tonight. We kept that under an hour. We try really hard to do that. So it's not too long, everybody. And thank you guys for spending a small part of your evening with us. Hope everybody has a wonderful fourth quarter. Have a wonderful holidays. I hope we get a chance to see you all. And we'll be talking to you soon. Look out for our newsletters, apps, webinars, and so forth in our TimeScale newsletter. So let us know what you think of those things. So thank you again.
Night, everybody.
Thank you, Doug.
Thanks, Jim.